You're watching Retirement Talk with Eric Kearney, Southwest Florida's retirement television. He's an author, a radio host, a fiduciary, and Southwest Florida's premier investment advisor. Here is Senior Investment Advisor Eric Kearney.
Hello, and welcome to Retirement Talk with Eric Kearney. I'm Wendy Falk, and I'm here with, guess who? Eric Kearney.
Eric Kearney.
How are you doing, Eric?
I'm doing great, Wendy. How are you?
I'm doing good.
Good.
Let's get the show off to a great start. What do you say?
I like that idea.
Okay. You know, we talk about all the planning with retirement and all that goes into that, and part of that is building a better portfolio for people.
For sure.
So let's look into 10 tips to look towards building a better portfolio.
Yeah.
You up for that?
Yeah, that sounds like a great idea.
Okay, great. Well, there are a lot of moving parts to a better portfolio, and you and your team cover all of these that we're about to go to.
Yeah.
So what about planning for a tax-free income? How do you all do that?
Yeah, so I think the biggest thing is that when people come to us, especially as of late, there's a hint of desperation in their voice. And they're like, Eric, please help us. And I can hear that in them, that they're tired of what they've gotten in the past. They're like, you know, it just seems like all investment advisors are the same. You guys just all do the same thing. And it's so not true, Wendy. I mean, you've been in my office plenty of times where you see all the processes that we go through. And so we have different things in place that we're actually implementing for that client. So as we go through these things today, I want people to know that there is a difference with advisors, that there are some advisors out there who really do take their planning very seriously. Planning for tax-free income is huge. And I'll tell you, we get referred to a lot of estate planning attorneys that say, Eric, I'm sending you over a client, they need to reduce their taxable income. And so the bottom line is what we're trying to do is setting up tax-free income streams for them so that down the road, they're not entering into a highly taxable situation. And so a lot of people say, well, isn't that what a CPA does? A CPA just records what you did for the past 12 months, putting it in your taxes and submitting it. We're looking at what's going to happen over the next 5, 10, and 15 years. And again, we're going to say, look, how can we create streams of income for you and maybe even reduce your market exposure? And the average millionaire we've talked about before has 7 streams of income. We're providing them more streams of income that are actually tax friendly. And this is something that a lot of people are craving and yet they don't have.
Yes. Well, and you all do that so well. Let's talk about limiting their risks.
Right. So limiting their risks, there's a lot of people, again, they come in, how can you improve my portfolio? How can I do better? Take a look at my investments. The thing is that a lot of people don't understand, if you're not managing that risk and you're not managing that volatility, you're not managing your rate of return. And so a lot of people are coming in and we want to educate them. Look, how can we reduce your risk? Because if you want to have that comfortability at night, that sleepability factor, how can we reduce your risk so that you're not constantly worrying about the stock market? So with this year, you know, people are realizing, holy cow, there is a difference between investment advisors. There is a difference between planning firms. Because for the past 10, 11 years, we've had this strong bull market run. Pretty much everybody made money in it. Right? And so now all of a sudden, when things get tumultuous, now all of a sudden you see where the good advisors are actually going out there and helping people, and there's other advisors who are not contacting their clients because they don't really know what to do. And we've already limited the risks in our clients' portfolios. So going into this, we send out videos, we let them know, we communicate with them, hey guys, guess what? We've been preparing for this. So, you know, we didn't know when it was going to happen, but we've been talking about a recession. Everybody's talking about the election. Everybody's talking about pullbacks and everything. This could very possibly be one of the biggest resets for the decade going forward. And so we still have to be prepared that, again, short term, we have to manage that risk. And so our clients want that in their portfolio. They want to know that we've taken care of their risk, we've lowered it, while also providing them income. And so again, you know, people forget how tumultuous markets get when the markets keep going up, and now they're realizing, okay, I need a different path, I need a better advisor, and that's where they're coming through and actually putting together the planning process.
And I know they really appreciate, your clients appreciate you 100%. They come into the office, they're happy when they get there. I've seen people that you've been working with for years, and they're happy to see you. You're happy to see them. They're like your family.
They really are.
They are.
I love, my client base is just fantastic. I mean, they are my friends. Like, you know, right now we can't do any handshakes or anything, and we're keeping the social distancing, but, you know, we typically hug each other, and it really is. I mean, they become very good friends of mine, and I do have a fiduciary responsibility to always look out for their best interest, but it's also, as family, you want to treat them better as well. And so when they do become family, that's a huge thing for us, because like I said, my entire staff, they do get involved with all of our clients, and we really do want to put them in a very good position.
Well, let's talk a little bit about your website. You just recently redesigned it, and it is beautifully done.
Thank you.
Can you tell the viewers how they can get to your website and what they're going to expect once they get there?
Yeah, we did. We went through a huge revamp. We wanted it to be very user-friendly. We also wanted people to go on there and be able to download tools. So you can go to www.erickearneyadvisor.com. And it's a fantastic website. They can download our portfolio recovery strategy and also our retirement income guide.
Here's the portfolio recovery strategy.
Yeah, it's a great book.
I love this book. I could just sit and look at the pictures because look how pretty it is. Southwest Florida is beautiful anyway. But
it is.
You all definitely captured the beauty of it in here.
Thank you.
And then this is the retirement income guide, correct?
Yeah, and that one basically goes through how to build a better portfolio, and then just, you know, how to enter in some sophistication into that portfolio. And I think the clientele that's coming into our office right now, calling us and doing Zoom meetings, doing virtual meetings, they're like, Eric, I need a change. I want some more sophistication put in my portfolio. And so really, as we go through this list, these are all things that people are looking for.
Right, and they appreciate it 100%. Well, let's talk a little bit more about building a better portfolio. We don't want to get away from what we were discussing.
That's right.
This one is maybe a little redundant, maybe not. You're the expert, you're going to tell me. This is minimizing taxes. We talked about planning for tax-free income, and this is minimizing taxes.
Yeah, so you have tax-free income streams, so you're pulling out income that's completely tax-free. But on qualified money, such as IRAs, people still want to further minimize their taxes.
Okay.
This is where a good advisor is able to forecast and to be able to connect all the dots that a lot of us aren't able to do. When we see a client that has an up-and-coming business, or they're a CEO, or they're accumulating a good amount of wealth, they're headed towards a taxable situation.
Yes.
And so we have a lot of people, again, that come in and I say, didn't your advisor know that you're going to be in a highly taxable situation 10 years ago? And they say to me, Eric, that's what we kept telling them. But a lot of people don't understand that there's a lot of financial planning firms out there that, number one, don't know how to do it, don't want the liability of it, and really don't want to be bothered with it. And so the thing is that we want to tackle that subject. We want to minimize your taxes. So we can create tax-free income streams for you, and then there's also other strategies to minimize your taxes. So they actually are two different things. And we just read a statistic last week that 55% of affluent investors feel that they need to control their taxes more than over a high rate of return. So a lot of people will come into me and say, well, Eric, I just need a higher rate of return to pay my taxes. The problem with that is now you have to take on a lot more risk and a lot more volatility, more than likely, to get that higher rate of return. So why not just minimize your taxes and not have all that risk?
Right.
So our clients are coming to us with, again, managing that risk, managing that volatility, and then managing your taxes can go in there with it. It's all part of that financial plan, and this is something that a lot of people just don't have.
Well, Eric, like I said, I know how you all at Retirement Wealth Advisors are, and you definitely cater to your clients and do all of these wonderful things for them.
Yeah.
Let's take a short break, but before that, you have a complimentary thing that you would like to offer.
Right.
Our first 10 callers that call in, the number is 800-779-1942. Eric, can you go ahead and tell us what that is?
Sure. If you've never had a second opinion, if you're interested in a financial plan, or you're looking for a portfolio recovery, we're going to take the next 10 callers who are in need of that financial plan that is missing. We're going to run all the reports for you, the fee report, the Morningstar reports, a tax analysis, maybe even a volatility index. What we're going to do is take a look at what you're currently doing and seeing how you can do better. If you're interested in your very own income plan, we can show you proven strategies and techniques to turbocharge your retirement income. In short, we're going to take all the guesswork out of financial planning, so give us a call. We're going to take the next 10 callers, 1-800-779-1942.
Stay tuned. We'll be back after this short break.
What does your retirement look like? Is it filled with travel, spending time with family, uninterrupted rounds at the golf course? Or are you too worried to even think about your hopes and dreams?
Questions about your retirement are normal. So come into our office, sit down with us, and let us help you find those answers.
Eric and his team can answer your questions with a complimentary review of your retirement and income plan, and it all starts with getting to know you.
We specialize in helping people just like you prepare for the retirement that they've always dreamed of.
They'll do exactly that by going over your current strategy to expose the weaknesses that may exist in your retirement portfolio. Plus, they'll explain potential risks and possible strategies to you in easy-to-understand terms and help get you reacquainted with your portfolio and income strategy.
What I enjoy most about retirement planning is sitting down with you and having real conversations about your retirement dreams and goals.
Once they understand your retirement goals, objectives, and dreams, they'll work to custom build a retirement plan to help ensure that you cannot outlive your income in retirement.
Retirement doesn't have to be scary. Let us help you retire confidently.
Because every dream needs a plan. Call Eric today and schedule your visit. You only retire once, so let's get it right the first time.
Thanks for joining us on Retirement Talk with Eric Kearney. Eric, before we went on break, we were talking about helping to build a better portfolio. I have a question before we get into back into the portfolio.
Sure.
You know, we've gone through a very difficult time as of late. What is the feeling that you get from your new potential clients that are coming into the office or that you're doing a virtual meeting with at this point in time?
Really interesting that you bring that up. I think that there's a lot of people out there that are scared. They realize that they're going down a path that's not very suitable for them. The one thing that we've talked about in all the classes and on my radio show is, my biggest thing that I want to get out to people is, were you sold a product or were you provided with a solution? And there's a lot of people that it hits them pretty hard because they realize, you know what, Eric, I was just sold products. They really provided no direction, no solution whatsoever. So what we do is we go back to the drawing board for them, and I tell them, and I sit down with a lot of people, I'm like, look, you're going to be okay. I don't sell on gloom and doom. I said, more than likely, you're going to be okay. We have to make some tweaks here, and we've got to make some changes, but let's put you through the process. And so if you go back through my emails and my videos, you're going to see me saying that time and time again. Look, you need to have this financial plan. We need to know where you are. But, you know, the thing is that we have to be very proactive advisors. The thing is that we have had tremendous growth over the past couple of years. We still have to take care of that client that we took on from day one. And so we have processes in place that we're taking care of all of our current clients. And then all of a sudden it leaves us room to take on new clients. And you are right. I mean, these people are coming in and they are scared. And so the thing is that I want to make sure that they're okay. I want to make sure that they're comfortable. And the thing is that when they leave the office, there's a huge sigh of relief. And again, we're going through how to build a better portfolio with them. We're showing them the strengths and their weaknesses about their portfolio, things that we can change. And a lot of times when we make a change, Wendy, it's not a lateral change. It's actually, there's 1, 2, or 3 darn good reasons why we're changing that portfolio. And at the end of the day, they're like, that makes sense. Why was I in this before? And so again, it's really not us telling whether it's good or bad. It's third-party software that's helping us do the analysis of their current portfolio. And again, it's showing them how they can do better. And it's at the end of the day, it's just a big relief for them, really.
Yeah, definitely. Well, let's get back to our building a better portfolio. How do you get people lower fees, or how do you talk to them? And maybe it's somebody that's been into or they haven't been your client for long. They've been with someone for a number of years, and they've switched. They've interviewed you and decided that you're a great fit for them. And you look at their portfolio and you think, oh, I've got to do something with these fees that they've been paying. How do you go about that?
So we actually do a personal financial blueprint, and what it does is it goes through and analyzes their portfolio. We've had people that we've sat down with them for 20 minutes and they've said, I know more about my portfolio now than I've ever known in the past 5 years. So we're going through strengths, weaknesses, rates of return, how much risk, how much volatility. Is it diversified or is it duplicated? And then we take a look at fees, Wendy. And I'll tell you, some of these funds, some of these portfolios are so outdated. They're 15 and 20 years old.
Oh.
And what's happening is the advisor is not really like evolving with products and tools. And so they're still using all these loaded funds that were around like 15 and 20 years ago. And these people are paying these ridiculous internal fees. And when I show them that, they're like, Eric, I never knew I was paying that. And so literally these people are coming in with very large portfolios, and we're saving them $5,000, $6,000, $7,000 a year just in fees that they didn't even know that they were paying. So again, also in a variable annuity, some of these variable annuities go 3.6 or 4% in a variable annuity. We don't sell variable annuities, we never have. The interesting thing is that a lot of times if we question what the company's fees are, I will get the company on the phone with the client right in the conference room, because it's not me telling them what their fees are, it's the company that they're in.
Right.
And they're blown away. So this is where we're really helping people out. It's like, okay, it wasn't working for you before, now we can get you into something bigger and better. It's in a financial plan. Now you understand the direction that you're going down, and it's just a lot better for everyone.
Oh yeah, definitely. Well, we've talked about diversifying so many times on the show.
Yeah.
This next one is diversify investment styles. I know you diversify their investments, but what does diversify investment styles mean?
How long do we have, Wendy?
Well, not that long.
That's the problem. So when it gets into diversifying styles, I think a lot of times our clients love the sophistication that our portfolios have. Because what we do is if we get into a fixed income side of the portfolio, there's a diversification to all of those fixed income. If we get into tax-free income streams, there's a diversification of different tax-free products that we use. So those are the safer side of that portfolio, but they're diversified within it. And then if we get into the equity side, that's diversified. And then if we get into a growth-oriented portfolio, that's diversified. So what's happening is that we're creating different portfolios that we can turn on and turn off as the markets fluctuate, always getting the client income, but yet what it's doing is it's all serving a purpose together. And so what we're trying to do is look at the entire portfolio, diversifying it all through the thing. People feel like, wow, I have diversification through the whole entire thing, but yet it works. And when it all works together, people are very happy about that. If I take a look at a portfolio and it's kind of all invested in the same thing, it's not working for that client, because if they're all up at the same time, people are really happy, but then all of a sudden when the market falls, it all falls down. So the bottom line is that we're trying to create different buckets of money so that you can survive any kind of market. So that's kind of what Diversify Investment Styles is in less than 2 minutes.
You did great, because you know what? We're going to have to take a break. So
really?
Yeah, so this will be a good time for you to share with our viewers what you're planning to offer the first 10 callers.
Sounds good. So if you've never had a second opinion, you're looking for a full-blown financial plan, or you're interested in a portfolio recovery strategy, give us a call today. This is a $1,500 value, no cost, no obligation whatsoever. So This is a great opportunity. We're going to build you your own financial plan. We're going to run all the reports for you, the fee reports, the Morningstar reports, a tax analysis, maybe even a volatility analysis. Let's see where this plan takes you. Let's see where this plan leads you. And again, without any obligation. If you're interested in your very own income stream, we'll show you proven strategies and techniques to turbocharge your retirement income. So give us a call today, 1-800-779-1942.
Don't go anyway. We'll be right back with more Retirement Talk with Eric Kearney.
Time with family, uninterrupted rounds at the golf course, or are you too worried to even think about your hopes and dreams?
Questions about your retirement are normal. So come into our office, sit down with us, and let us help you find those answers.
Eric and his team can answer your questions with a complimentary review of your retirement and income plan, and it all starts with getting to know you.
We specialize in helping people just like you prepare for the retirement that they've always dreamed of.
They'll do exactly that by going over your current strategy to expose the weaknesses that may exist in your retirement portfolio. Plus, they'll explain potential risks and possible strategies to you in easy-to-understand terms and help get you reacquainted with your portfolio and income strategy.
What I enjoy most about retirement planning is sitting down with you and having real conversations about your retirement dreams and goals.
Once they understand your retirement goals, objectives, and dreams, they'll work to custom build a retirement plan to help ensure that you cannot outlive your income in retirement.
Retirement doesn't have to be scary. Let us help you retire confidently.
Because every dream needs a plan. Call Eric today and schedule your visit. You only retire once, so let's get it right the first time.
Thanks for tuning in to Retirement Talk with Eric Kearney. Eric, before our break, we were talking about how to build a better portfolio.
Yeah.
Should we continue with that?
Sure, sounds good.
All right, let's do that. This is the next one that is helping to build a better portfolio. You utilize index funds and ETFs.
Mm-hmm.
Tell me about that.
So index funds and exchange-traded funds have evolved greatly over the years. And so when we really go to build a sophisticated equity-driven portfolio, we can use a lot of exchange-traded funds to get into very different asset classes. And so a lot of times we want to use a very specific asset class, and we're able to do that in an exchange-traded fund. And actually we're able to lower our risk and lower our volatility through an exchange-traded fund. Plus, it's a very inexpensive tool. So it's a very powerful tool. You can rebalance it on a regular basis. And so we like to use those much more than a loaded fund.
Oh, okay. What about a coordinated approach? How do you do that?
Yeah, coordinated approach is what a lot of people are missing.
Yes.
You know, they don't have that financial planning side. They don't have that income planning side. They don't have that concierge service. They don't have the wealth management side. With our firm, we have that all under one roof. So people are coming to us for tax planning, whatever it may be, and we're giving that one client a coordinated approach. Again, we don't care that the rest of the world's falling apart. We care about that client at that time and making sure that they're covering all their goals and objectives. And we think that that's the most important thing.
Oh yeah, because your office you do the investment portion of it. Autumn does the concierge. You've got Donna who's doing the financial portion of it, and you have Joey now as well.
Right.
So you all are like a well-oiled machine and like take care of things together and take such good care of your clients.
Yeah, we do. And then we have huge back offices as well. So, I mean, we have 60 people up in Michigan. We've got people out in Topeka, Kansas. I mean, we have all these big offices, these back offices that are helping serve our clients. So we're really moving a lot of paperwork lately. It's pretty amazing.
Yeah, it's great. Well, how do you potentially avoid loss?
Right. So again, with this market, people didn't really have a downside strategy. And I always ask someone, what is the system that is used to choose your investments? And it's a good question because a lot of people come back and they're like, I have no idea, Eric. So the bottom line is that people actually want a system that's actually choosing how their investments are chosen for downside potential. So the thing is that when the markets slide, all of a sudden they're really paying more attention to their portfolios than ever before.
Right.
You have to potentially avoid loss when the markets are up, right? And so we're doing that through a series of different things that we do in the portfolio, and we're implementing that strategy. So each one is different for each client, but we're letting them know this is how we're reducing your risk and your loss going forward, and they understand that. So while it's kind of hard to talk, about under 2 minutes, every single client has that in place, and we're implementing that in the financial plan, and that's how we're able to get through a very difficult year like this one. So there's a lot more people out there, I think, that are really craving that, and that's where they're giving us a call and saying, okay, we need to get this done.
Well, people need guidance right now, wouldn't you say?
Yes, for sure. They want to know that they're going to be okay. And like I said, it's like, people are paying attention to their investments, but if they don't have a financial plan or the income plan, that part's going to fail.
Right.
So you really have to look at the first two and then take a look at the end result of that.
What about withdrawing income, especially at a time like this? I mean, people that are retired already are having to withdraw income, I would think. Or I know that in your practice you create all kinds of steady streams of income throughout their portfolio. What about when people feel like they need to withdraw income? Maybe at this point in time, maybe some of their children might need help. Maybe someone's lost a job. How do you help them do that? Yeah,
absolutely. So the bottom line is that you should be withdrawing assets from appreciated assets, not depreciated assets. And there's some people that say, well, geez, Eric, I have 3 accounts. I just figure I would deplete this first one and then go to the second one and deplete that. And then hopefully the third one will be there for me. That's the worst thing to think about. And we've actually seen other advisors' accounts where they're actually literally depleting those accounts. No. And so we have helped so many people, and this is the gratifying part of my job, is when I see somebody depleting an account and I say, stop, no more. And as much of I like to have a good time and everything, and I joke around with my clients, but when somebody comes in, even though they're not my client at the time, I'm very blunt with them. I'm like, no, this is not working, stop. And I'll say to them, we can no longer take out income from this account. We have to fix this account. You're taking from depreciated assets. So what we do is, we've done this in the past, is we've turned off this account. Let's improve this account, make this one more equity driven. You want to pull from appreciated accounts. If we forecasted that account going forward, I think that one was going to run out of money in about 11 years. By changing around the portfolio, we actually made it up to about 27 years. Huge difference between the two portfolios. So again, when you go through accumulation, remember that when you go into retirement, you go into decumulation. There's a lot of advisors out there that do not understand decumulation. And so again, you might be working with somebody who doesn't really understand withdrawals of income, and you really have to pay attention to that.
Well, Eric, it's time to open up the phone lines again. 1-800-779-1942. Can you tell our viewers what they'll receive if they're one of the first 10 callers?
Absolutely, Wendy. Please give us a call. If you've never had a second opinion or you want a financial plan, please give us a call today, 1-800-779-1942. Thank you for joining us today on Retirement Talk with Eric Kearney. Have a great day and an even better retirement. We'll look forward to seeing you again next week.